What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm jumping back into another marijuana company here. Doing two videos today. We're going to stick in the sector. There's another company down the list here on the marijuana stocks you might be familiar with. If you know CGC, then you probably heard of Tilray Incorporated, ticker symbol TLRY, listed here on the NASDAQ. And you can see today's stock up just about 0.5%. Stock closed at $3.56. We have a 52-week low of $2.65, 52-week high of $9.08. Market cap, we'll call it $2.2 billion. Now, we come down here, a couple of news stories here, right? And it really doesn't care. I mean, it doesn't matter. It doesn't care, I said. But I don't care, and it doesn't matter, right? Because we come down here, we care about the numbers, right? First of all, annually, this is absolutely phenomenal. 2018, 37 million. 2021, over 600 million we're looking at here. Now, obviously, you're seeing something similar when we look at CGC, and now we're looking at Tilray, and what you're seeing is the losses are just astronomical. However, I will say, to Tilray's defense, at least they're bringing in more than they're losing here, right? So, the one good thing here about Tilray, right? It says it's an American pharmaceutical cannabis freestyle and consumer packaged goods company incorporated in the United States, headquartered in New York City. But it says Tilray also has operations in Canada, Australia, New Zealand, Latin America, growing facilities in Germany and Portugal. Right? Recently merged with Afria, and maintaining that Tilray name and symbol here on the NASDAQ. But as we can see here from this highlighted area, not only do we have a company that is losing less than CGC, but we have a company that is also outside of its main headquartered facility, right? So, to my knowledge, CGC, Canopy Growth, is strictly based in Canada, and here we have Tilray Brands, and as you can see, based here in the States out of New York City. However, they got some operations, internationally as well. So, in my opinion, that would already make this more attractive, right? Switch over here quarterly, as you can see, basically maintaining like that $150 million mark, which isn't necessarily a red flag, right? We always say we want consistent increases in revenue and profits quarter over quarter, year over year. But if you can at least maintain, let's say, this $150 million mark, and then we move forward a couple of quarters, halfway through 2023, and all of a sudden they jump up to 230 million and change. I mean, that's what you want, right? They're getting all their ducks in a row. They're maintaining their business level, that revenue level, and they're gearing up to take the next leg forward. Hopefully, right? You would want to think that, think that way in a positive light here when looking at a stock, especially if you own it. But again, this is astronomical growth here year over year, and in my opinion, it would be the profits that would be holding this stock down. We're looking at we'll say about 600 million in revenue, and we have a market cap 2.2 billion. So that's a little over 3.5 times total revenue, a little less than 4 times yearly revenue. Right now, we have brand name, big name companies out there that aren't trading at that multiple. Excuse me. However, this was in the marijuana sector along with CGC, and young people love marijuana, and it's going to be legal everywhere, so all of these companies are going to absolutely explode, supposedly, right? And if we look year to date, we can see stock down roughly 52% year to date, has been taking not as much, but a similar sell-off with CGC. And if we switch over here, this is a one-year chart on Tilray. And as you can see, just looking at the numbers, big miss on the EPS side, slightly came under with revenue here. Quarter before, excellent beat on the revenue side by almost 12%, coming in almost 18 million above analyst estimates. Again, big miss on the EPS side. Here, you got a beat on the EPS side, but slight miss there. Like I said, kind of maintaining that $150 million. That's like their ceiling here. And look here, even back here, roughly 12 months ago, estimates were up to 170 million, assuming that revenues would consistently grow quarter over quarter. And the company comes in with 150 million. And that's where, see, estimate dropped from 170 to 156. They still missed. So estimates dropped to 151 million. They had a phenomenal quarter. So they went back up to 155 million, and they missed slightly with 153 million. So that right now is looking like the cap of this business, right? But again, it's momentarily the cap, right? We can call it. But, you know, they're trading at a healthy multiple. Earnings are rough. Revenue is hit and miss. As you can see, look at how flat that revenue is. I mean, you have to respect the consistency. I will say that. However, obviously losses, you know, definitely nothing to write home about. We got some sell markers here. I don't know who does that. But we switch over here. We look at some of the numbers here, right? We switch over annually. And, well, they're getting more and more employees. I don't know how accurate these numbers are. I mean, again, this is through TradingView Financials. But, you know, we'll take it as it is. But, you know, that's a good sign, I guess. Price to sales ratio has pulled back with the price of the stock now sitting at about 3 1/3. And the price to book is now less than half, right? So the stock's sitting here at 356. It is less than half, which means that technically the company has a book value of what, like 7 1/4, we'll say. So, you know, $3.56 today. Book value supposedly $7 and change. But I don't know if that's enough, me personally, to make me buy the stock, right? I know a lot of you guys, you know, you're seeing these stocks, they got beat up, they're only a few dollars a share. You know, we want it to be a big industry, so we want to pull the trigger and we want to accumulate shares. And again, it's your money, you earned it, you work for it. So however you want to look at this, whether you want to buy or short shares of any of these companies, remember, that is your money. Whatever you do with your money is entirely your own prerogative. You know, I'm only making these videos here just to do a little overview here and just give my slant on how I look at some of these investments and, you know, be more successful than we are incorrect, right? That's basically the goal here. Profitability ratios, as we can see, basically negative across the board. However, you know, slight increases here. You know, you had a big drop here. What is this? 2019 return on assets was, you know, over negative 40%, has since climbed up to minus 10%, and then even got back to negative single digits, and is now sitting at minus 8.79%. So even though these numbers are not positive, at least they're semi-trending in the right direction, right? The return on equity, again, took a massive hit, got a good rebound here up to about minus 15%, got to minus little under minus 11%, now minus 11.5%, right? Not the biggest red flag, also not the best buy signal in my opinion, right? Return on invested capital, same thing, bouncing around, was over minus 40%, got to minus 12, minus single digits, still maintaining minus single digits, even though it, you know, it did go down a little bit from where it was the year before. Gross margin percentage has jumped up to almost 16%. As you can see, though, has had massive volatility over the years, getting over 52%, and getting as low as minus 21%, right? So this is going to be one factor that we're going to have to keep an eye on moving forward here, which might show us a little bit more of the whole situation and the whole story here with Tilray moving forward. So we'll definitely keep an eye on this gross margin percentage. Operating margin percentage, again, same thing, very volatile, swinging around, got to minus 13.33% about, dropped down to minus 36.5%, now sitting at less than minus 22%, right? So we do have some positives, but this is what caught my eye here, the EBITDA, again, earnings before interest, taxes, depreciation, amortization. One metric, one indicator that a lot of investors and a lot of traders use to dictate the future value or potential growth of a stock or a company overall. And as you can see, the EBITDA margin right now is sitting at plus 0.5%, right? Is it massive? No. Is it anything to write home about? Should you buy the stock right now? In my opinion, I would say I am not a buyer, but again, it's your money. Whatever you do, entirely your own prerogative. However, again, we have volatile swings over 125% negative, minus 120%, and then we have a massive bounce back to almost flat, drop back down to almost minus 12%, now slightly positive. So that, in my opinion, is a very good sign, especially when we compare these numbers over to CGC, which, you know, I made a video a little while ago. if you guys want to check that out, you want to compare both companies, because again, in my opinion, Tilray, I feel that it could potentially continue to go lower. However, like we laid out here, we do see some positives, at least with this company. So I, in my opinion, again, would probably be more of a buyer of Tilray over CGC. That's just me. But again, I might also sit on the sidelines. I don't know if I would necessarily pull the trigger now, in my opinion, on Tilray. But again, a couple of factors, a couple of metrics here that are trending in a better direction, at least, when compared to CGC. Net margin percentage, obviously, the company is net income negative, so it is negative. However, it did have a massive drop to almost minus 200%, and then slowly climb out, and is now sitting at about minus 48%. So again, a couple of things to keep an eye on here. But Tilray, overall, I guess you could say it's a little bit of a healthier company. Just want to switch over here to stock charts real quick. We have an RSI of sub 45. MACD looks like it's slightly pulling back here from this recent run. However, I will say with the close here at 356, you could potentially say it's still in a downturn. However, the one thing is the 50-day moving average 366, at least it's near it, right? We're in an uptrend basically since kind of like the end of September. We've been in an uptrend going from about 270 and change up to $5+ here. In the last about 2 months and change, has since pulled back to about this 3.5 mark, but again has been fighting to jump back up to that 50-day moving average. So we could still be in a little bit of an uptrend here for Tilray here. We have our 200-day moving average 422, again jumped up and then immediately broke down that moving average, but you can see it did have a little bit of support here at this mid-Bollinger Band, but of course broke it and continued to sell off. Switch over here to the weekly, and we have an RSI of about 45 and change. Look at this 200-day moving average of 16.5, right? Probably not going to get there anytime soon, in my opinion. And you're seeing just a similar technical pattern as shown with CGC. How we had our pop here, and then you can see that there is the resistance at the mid-Bollinger Band with the stock fighting and then bouncing down and selling off. We did have the recent breakout just like with CGC. The one thing I will note here, though, is that with Tilray, it had a slight rejection here at the 50-day moving average 452, but it did have that pop up to 5, and then it pulled back, and now it's kind of chilling at that mid-Bollinger Band, right? So we're not seeing an immediate break, an immediate sell-off. So, the rejection might not be there, but again, looking at the numbers, I think we could have a little bit of a pullback, 350, maybe if it comes down to, this bottom Bollinger Band here, 260, 250. In my opinion, I might be more inclined to purchase shares at that discounted price, even though it may seem discounted here at this level. Again, it just ran from mid to low 2s to an almost double of around 5. So, let it catch its breath for a little bit. Let some people continue to take profits, and then, in my opinion, again, there's no perfect price, but I would probably at least buy this below $3 a share. That's just me, though. That's just me. But I'll leave it there. Just wanted to do another quick overview of another marijuana company. Again, this one headquartered out of New York City, has some international footprints around, so a little bit of a different slant here, some different numbers, and potentially a different chart, and a little bit more different growth potential moving forward, right? But again, it's your money. Whatever you do with it, entirely your own prerogative. I will leave it there, though. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. If you like the videos I'm putting out, push the subscribe button. It means a lot to me. I love you guys. And like I always say, moving forward, I understand markets are rocky. They're volatile. They're uncertain. So I wish everyone success. I hope everyone makes a few dollars. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. And thanks for stopping by. Have a good day, guys.